So, guys, did NVIDIA just save the market? Now, I think that they just might have. So, in this video, we're going to be talking about how these earnings that just came out from NVIDIA are going to be changing the market, how they're definitely going to be having a massive impact. Well, we know that NVIDIA is a huge component of the indices of the market as a whole. But as of late, there's been a lot of concern about an AI bubble. I'm sure if you're following the finances that the financial markets, you've heard about this over and over again. The likes of Michael Burry talking about depreciation expenses, different things like that. And while that might be justified in the semi short term, I do believe personally, if you guys want my own personal opinion, that that's not really much more of an issue. I think it's more whether or not this AI bubble is a bubble in terms of is demand going to continue, right? Are we going to see this go away from all these massive hyperscalers and go into basically every business? Everybody needs one. Everybody needs their own, data center, if you will. I think that's what's going to be the determination whether or not this is an actual bubble or not. And for at least right now, this was a pivotal moment. It seems to have not slowed down whatsoever. NVIDIA's been up anywhere from 5 to 6% after hours. Definitely markets liking what it's seeing, about 4.8%. It's not going to be long. I think we're going to see this over 200 again. So why? Why has it not slowed down? Well, take a look here, guys. Again, these numbers are just phenomenal. Revenue for this quarter, over $57 billion. That's up 62% year over year. So we're still seeing that phenomenal growth. Sequentially, again, phenomenal growth. Just 4 quarters ago, we were 39 billion. Gross profit, 41.8 billion. That's up 60% year over year. Operating income up 65% year over year to $36 billion. And of course, net income was 31.9 billion, up 65% year over year. EPS $1.30, up 67% year over year. And we're sitting at cash of just over 60 billion. Look how that's grown as well. And I talked about in my last video, the main thing that investors are looking at with these earnings, we're seeing these massive growth numbers, but gross margins and net margins have definitely been something that is being analyzed quite a bit. After this write down in Q1, where we saw gross margins go down around 60%, we've seen sequentially them increase. And this quarter, 73.4% gross margin. Fantastic. Year over year, it's down still slightly. It was 74.6. That's the only kind of, mark that I'm going to put on this quarter. But look at the growth still. But operating margins have improved. 63.2% versus 62.3%. Or 63.2%, I hope I said that, versus 62.3%. That's hard to say. It's all jumbled up for some reason a year ago. So notable improvement there as well. And net margins at 56% have increased 100 basis points year over year. So fantastic. Absolutely fantastic. This was supposed to be a great quarter. Better than I thought. Again, I always like to put this little thing in here, just the stock price, their PE. As of closing, as of now, they're about 46 times earnings. Not particularly expensive. We'll see what happens when it opens tomorrow in the morning here. And if you were to put an ADP on NVIDIA, you get a 322 stock price. Of course, we're not trading at that multiples, but we've seen other companies, a lot of them trade high multiples like that, right? So let's go into the financials a little bit more. I like to start with this one because it breaks down all the different segments of their business, and we can look how it's done, basically over the last several years, and also year over year. So data center, this was actually a record. 51.2 billion versus 30.7 billion a year ago. Look at that growth, right? Q4 25, Q1 26, and of course, as I said last time, guys, their quarters are different than the calendar year, so we're in Q3 2026. Gaming has actually done quite well year over year. It was 3.2 billion a year ago. It's 4.2 billion now, but it's dropped a little bit sequentially. And so there's a little bit of weakness here, but I said this on my last video. I'd really like to see and I know on the last quarter, I think it was Jensen actually talked about this, when AI comes to video games. Like, I think that's going to be something in the future we're going to see a huge amount of growth here. What does that exactly look like? Are you going to do it over the internet to like a large language model, or is it going to be something kind of central on a chip? I don't know. You know what I mean? But that is something that's, I think, is not really being talked about too much. But of course, comparatively speaking to the data center, it's really not much. Professional visualization, 760 million versus 486, again up year over year. Auto's done quite as well too. It is 592 $1 million. A year ago it was 449. OEM and other up again year over year to get that 57.006 billion versus 35.082 billion. Wow. Now take a look at the income statement just a little closer here. Again, revenue is $57 billion. Gross profit was 41.8 versus 26. We talked about the gross margin, so that's probably a better way to actually look at it to see how much is the cost of revenue relative to the actual revenue, right? So that's why I could look at it from that perspective. R&D, 4.7 billion versus 3.9 billion. I really want that to go up, so I got no problem with that. Sales, general, and administrative went up 1.1 billion versus 897. That's to be expected, I guess. So total operating expenses were 5.8 billion versus 4.2 billion a year ago. Everything else here was pretty in line in terms of their operating income and expenses here. We saw interest income of 624 million, so that was up. Interest expenses in line. Other income, so this is from their investments, marketable, non-marketable, 1.3 billion. So that made a difference to their total other income here, 1.96 billion versus 447 million. So that definitely made a difference to their bottom line a little bit there as well. So keep that in mind. Balance sheet, not too much to talk about here. Cash, we're looking at over $60 billion versus 43 a year ago. Keep in mind they've been paying just like a dividend. They've been buying back shares, so that's definitely affected that a little bit as well. But current assets, 116 billion versus 80 billion a year ago. Pretty big growth there. I'm not going to go through the statement of cash flows. I'm going to go through that after that. I didn't realize that I had the liabilities here as well. Talking about some of their liabilities here, long-term debt, like to see that went down a little bit, 7.4 billion versus 8.4 billion. And now, statement of cash flows. I'm not going to go through the whole thing. Operating cash flow is fantastic, A+ in my opinion. But then, even though how much this is such a growth company right now, they're still, buying back stock, right? 12.4 billion, dividends paid 243. So we're like, I think it was 12.7. I can't do the math in my head. 12.7-ish billion dollars this quarter. So even though that they're doing all this other stuff, they're still buying back. I mean, the dividend yield is quite low, of course, but they're buying back a lot of shares. Now, I went through my projections last quarter. This is 1000xstocks.com. I'll leave a pinned comment down below if you want to see if you can get access. I love using this. And this is my bull case for now. It's more of a kind of a quick and dirty, but as you can see, the revenue growth, I'm putting for 2026, 70%. And, that's kind of getting us in line. 2027, we're hitting 459 billion. Keep in mind, and we're going to get into this a little bit in the conference call, they're saying by fiscal 2020, or not fiscal, sorry, a year-end 2026 would be like running into their fiscal 2027. We're going to see up to $500 billion in revenue. So that's still keeping this below that level, right? So I kind of had to represent it this way. And then dropping off to, because I think we're definitely going to see revenue deceleration, 40% in year 2028. In terms of their net income growth, 25%, 20, 10%. If we're just looking at this year, that gets us to the EPS of about $5. I project it's probably a little bit lower than that. But again, this is my bull case. Putting out a PE of 35 to 40, which I think is cheap for this company, I guess because it's so big. That puts us anywhere from 175 to 200, basically where we're at right now, right? So it's pretty in line. So projecting out here, by the end of 2028, we could be seeing anywhere from 231 to 264. I wouldn't be surprised, in my opinion, to see NVIDIA, if things continue, 300 plus. But I think this is a relatively modest, 2028, 643 billion. Um, their EPS $6.60 per share. I got on my bull case here, but I think that's relatively modest as long as we see things continue to go the way that they're going, right? In terms of conference call here, guys. Again, record data center revenue of 51.2 billion. That was up 66% year over year. I was just talking about this end of calendar year 2026, $500 billion revenue still on track. It's just crazy. This news came out recently, right? So one of the analysts asked questions about this. So they still got roughly another 350 billion in the next 14 months or so. They expect this number to grow. So again, like I have it under that, and yeah, so they're still expecting that to grow, but that's as of now. Also keep in mind, Jensen's always pumping up the amount of demand here. And of course, that's the CEO's, that's his job. But I was kind of thinking about this before the earnings came out. I thought how exceedingly bullish he is. If he doesn't meet these expectations, I mean, there is some fiduciary responsibility on these executives to be realistic, right? I mean, they can be as bullish as they want, but he's being so over the top that it makes me believe that we have to believe in this, because he probably run into some regulatory problems if he's completely misleading this, right? And he's saying basically this is the next industrial revolution. This conference call, I'm not going to get into all the different partnerships they went into, all their Blackwell chips, all this different kind of stuff, right? But his remarks were that Blackwell, demand, that's the newest chip, is off the charts. If you see my thumbnail there, and the cloud compute GPUs are sold out, right? So those are facts. One of the strategic partnerships, though, I'll note this one with OpenAI. They announced this just now to deploy at least another 10 gigawatts of NVIDIA systems for their next generation AI infrastructure. Interesting to see how that's going forward. There's all this concern about circular financing. I haven't talked about this too much on my channel, but I am very concerned about that. I'm watching it. It's basically, if you're not following this, one of the deals NVIDIA is like, well, we'll give you $300 billion to OpenAI. We'll give you $300 billion, but you got to buy chips from us. So it's like them giving money and then recording as revenue, right? And that's why I said at this beginning of this video, when we see, to know whether this is a bubble or not, it's going to be whether it's just mass adoption, whether we get out of this circular investment type thing that's going on right now, right? Gross margins actually exceeded margins. Well, that's a typo. Gross margins actually exceeded their expectations this quarter. And I guess, of course, it was to be expected that there was a question, are we in an AI bubble? Jensen said they see something very different. He went into all of agentic AI, generative AI, basically all the stuff he's been saying. If you want more of the specifics, I would recommend watching it's on YouTube, it's their NVIDIA, I think it's their NVIDIA Day. I can't remember if it's called their Investor Day or their NVIDIA Day, where basically he goes into all this into great detail. Very great watch, very long, it's like 2 hours, but I enjoyed watching it if you're really into the nitty gritty of it. We're just talking about the finances right now. In terms of guidance, the Q4, so next quarter, the outlook's about 65 billion plus or minus 2%. That would give us 65% year over year growth. $65 billion. Keep in mind, this quarter, guys, we're 57 billion. So we're still growing. That would give us 65% year over year growth at the midpoint. Phenomenal. We just saw about 60%. Still, we're going to see no data center compute revenue. Man, I have a lot of revenue edge. I have a lot of spelling mistakes. I just wanted to get this out for you guys. No data center compute revenue from China. That was to be expected. If we ever see that basically come back, watch this talk then. Gross margins, 74%. They expect them to be 74%, 74.8%. And this is up year over year, 74.8%. Keep in mind, this quarter, we're 73.4. So again, we're seeing that acceleration of gross margins. Love that. That's what the markets love as well. And they expect next year to hold those gross margins in the mid 70s. So we hope that they could do that. So all over, all things considered, this was a phenomenal quarter. I think a lot of people expected it to be a phenomenal quarter. Analysts expected it to be a phenomenal quarter, except for they basically beat on all analyst estimates. I believe gaming is where they missed slightly, but it was a beat. I'm still holding my shares. I think this is too big of an opportunity to sit out, in my opinion. In my opinion, I think this is going to be over 200 quite soon here, and it's going to be extremely interesting to see what happens in the next several quarters. Like the video, guys. Leave a comment down below. Let me know if you're holding the video, what you think. What do you think of the circular financing? Do you think that we are in an AI bubble? I'd love to know what you guys think. I'll see you in the next one.